getting dividend cuts is a unfortunate thing that happens when you are trying to build up a dividend portfolio. And with all the things going on in this world right now, dividend cuts are coming out more and more and becoming a very common thing. So we're going to talk a little bit about that. We're going to talk about some stuff going on with Spotify, and then also going into my portfolio so you guys can kind of see some of the stuff going on here, as well as answering some questions. And if you want, you can toggle around the bottom. You can see kind of the areas where you can jump to if you're just interested in some, or whatever areas you want to go to. So first and foremost, we're going to go ahead and hop on my portfolio here, and we're going to take a look and see what we're doing and how it's all going about. So right now I am sitting at $4,600 in the account so far. We ended up with a red day. That's why I kind of have a little bit of a red in the background right now. But nothing too bad, only down 0.19%. I know sometimes people are curious when it comes to M1 Finance. This is the platform I personally love to use when it comes to dividend investing, which if you're curious, I'll have a link down below that helps support out the channel. But essentially, this return right here is money-weighted return. Essentially just means that everything that I've ever bought and sold is still calculated to this total versus me just paying attention to the unrealized gains and losses, which technically I'm up on. But I actually prefer this method of money-weighted return because I can still see the profit I've made on certain stocks if I sold them and kept that money in the portfolio and invested them in other areas. So you could see here in my I'm actually up 34.32% on my actual money, which is up to $282.89. So pretty fantastic. Obviously, I'm a dividend investor, so I do care about dividends. But right now, if I take a look at my actual portfolio, my current yield is 3.42%. Now, this is going to change a little bit because we are going to be talking about some dividend cuts that were going on, and it's a very unfortunate thing as a dividend investor to be hearing about dividend cuts. First of all, just cuts in general, because it's never a fun thing to hear about, but it sucks even more when you see that it's a company that you own in your portfolio. So do I sell it? Do I hold on to it? What are some of the decisions that you have to make when it comes to being a dividend investor and then hearing about dividend cuts that go along with the ones in your portfolio, which we'll talk about, of course. So I personally like to follow Dividend Cut and also Dividend Hike on Twitter. If you guys follow them, they're fantastic. They honestly have some of the quickest updates when it comes to dividend cuts and dividend hikes. So just earlier today, when I was planning on just recording something, they announced that the dividend aristocrat Ross suspended their dividend, which is really unfortunate. I kind of saw it coming only because a little while before that, they also announced that TJ Maxx decided to completely suspend their dividend as well. So I figured if one was going, the other one was probably going to follow suit, and that was the case. So it's really unfortunate because I do own some stock in Ross, not a crazy ton. I've talked about this on the channel already a couple times going through this journey. I don't have a ton of money in the portfolio because I've been investing slowly but surely. So for me, I'm just building up this portfolio, and over time, this is going to grow to a pretty massive amount. So you can see right over here in my retail stock portfolio, you're going to see Ross right over here, and right now they're actually up quite a bit even after the suspension of their dividend. I have about 2.05 shares, average share price of $89.90. They closed off the day, which was the 21st, at $96.87. So I'm actually pretty happy with where it is on that front. But of course, the dividend cut itself is a little hardening because it's really sucks to see that. So, the big question is, do I sell the stock? Do I hold it? What is going to be the best option for me? Now, I actually talked about this before. Ross is one for me, a company that I actually really, really like in general, just as far as how it runs, and then just on the actual user side of things, like a consumer, I do consume a lot of their products that they have. Like half the stuff I think back here are from them, just in general. But there are also growth when it comes to a stock that I wanted to have in the portfolio, instead of just focusing on the dividend, because their dividend was pretty low. It was, I think, less than 2%, if I'm not mistaken. Yeah, it was actually on here. It still shows it. It was 1.12%. So it was a very low actual dividend yield. So I was actually holding them more so for the growth opportunity versus just the dividend yield. Plus, their 5-year dividend growth was really stellar, which I loved, especially for being that low of a dividend. So it makes it hard to keep the decision of selling or going out of the portfolio. But this one, I think what I'm going to do is actually hold on to Ross for the long term. I think they're going to come back with a dividend. It was a little surprising to hear as a dividend aristocrat because they just got the status recently that they actually suspended their dividend, even just like within that same year of actually getting to that dividend aristocrat status. So for me, holding on to this one, there was Disney that suspended their dividend a couple of weeks ago, and I actually decided to move out of Disney for different reasons overall. But yeah, I think Ross still has a lot of opportunity for growth. If we look at their stuff right now, obviously I'm here on Seeking Alpha, and this was published by Stephen Alfer. And he just mentions a couple of really important things. Obviously, with Ross, a lot of their stores were closed for a long time, so it was really, really tough, obviously, to have income flowing. So the results were pretty abysmal in comparison. You can see it right here. The dividend is suspended. The guidance on new store openings this year is cut. The company reported more than $3 billion in liquidity, which includes $500 million revolver. And it says right here about 700 stores have reopened since May 14th. I actually went to the opening again here at the shop near me. It seemed really crazy and packed. It was almost like Christmas in a way. And it says with the remaining stores expected to reopen in the coming weeks. They didn't have a Q2 or a full year's guidance, which is really difficult for a lot of people when it comes to, wanting to make sure they have a clear path of where they're going. But I think with everything going on, it's hard to have that kind of path, especially with retail, like physical retail, where there's a lot more limitations versus, like online stores, because Ross does not have a great online presence, which is unfortunate. So you can see here, they are down, it says 1.9% after hours. So after they announced everything. So yeah, little unfortunate on that front right there. But then moving on to the next story, we're going to talk about Spotify. Now, as a dividend investor, talking about companies that don't pay out dividends, I just found this really, really fascinating. So again, I'm here on Seeking Alpha. This one is by Jason Aycock when it comes to the story. And obviously, the story is actually all over the place, but it was Joe Rogan announcing that he was going to be exclusive on Spotify. So that just like exploded the stock pretty significantly in one single day just because of the news. So I always thought that was interesting. If you are investing in a lot of these growth companies, the news can really have a huge impact, positive or negative. And I've seen that multiple times. Tesla has that all the time, actually. And half of that is just with, Elon Musk tweeting stuff out. Where these things can have a big impact because they have a lot more exposure, I think, to like the social world than a lot of these older companies like Ross or whatnot that have maybe less impact from these type of pieces of information. So for me, I don't have this kind of stuff invested in my M1 Finance portfolio, but I do have some growth stocks in my Robinhood portfolio just because I do like to trial some stuff out. But let me know if you're a Spotify holder in the comments down below. I'd be interested to hear, are you going to hold on to the stock, or are you going to, maybe sell it and, take the profits for now because it might dip back down? Because I've seen that happen quite often with, growth stocks where it has a nice growth because of some big news and then maybe it dwindles down a little bit, so it goes back down. But I'd be interested to hear from your guys' perspective on that front. So back here on my portfolio, at this point now, Ross is going to be the only company that is actually not paying out a single dividend. Everybody else that I hold, like I showed you, I have a pretty high dividend yield. Everybody else does cover a dividend at this point too. So, always depends on your preferences, whether you're going to sell or not. Let me know in the comments too, if a company that you hold a good quantity of ends up cutting their dividend, is that going to cause you to want to sell out? Do you hold long term? What are your plans for that? Like I said, I like Ross. I like where they're headed overall and how they can sustain during most type of recessions. Obviously, this one was quite different than the rest. Still really, really sad. Gonna be a little sad for that for a little while, but just means that I can maybe reallocate a little bit of my percentages from Ross here, because right now its target is 30%. I can readjust that to maybe go to like Home Depot or Target, Starbucks, maybe even Costco if I wanted to, just so that way more of the money is going into those companies so I can earn those actual dividends in that front as well. Because that's something you can do too. Instead of selling, you can just reallocate things and have that money going towards actual companies that are paying out those dividends if you care about, focusing more so on the dividends than the growth, which is partially what I do in this account. There's a lot of dividend focus, but there is also some growth focus as well too. So I don't just care about the dividend. I care about both aspects of it because I think if you do one or the other, there's not as much of a balance in my opinion, but again, that is just the way I personally prefer it. Now, before we move on to some of the questions we got in the previous videos, if you are someone who enjoys using M1 Finance as an investing broker or just like to talk about investing in general, I do have an M1 Finance investing club on Facebook. You can join in the description box down below. Makes it really easy to have a community and have conversations back and forth, asking questions, sharing our successes, maybe some of our failures. But if you guys are interested in anything like that, I'll have that link in the description box. You could just go ahead and join. Now, let's go ahead and jump into some of these questions. I just have a few today, but the first one comes from Brian T. Brian says, hello, first-time viewer, and I love how you present the facts and are very transparent on your information. Thank you. Says, I would like to create a dividend portfolio similar to yours and hoping to make another source of income along the way. I have a brokerage and a Roth IRA at Fidelity, but I am interested in opening an M1 Finance account for dividend portfolio. Question to you, would it be best to invest in a Roth IRA account or a taxable account or just a regular IRA? What would be best for short-term and long-term? Thank you. So this was a great question. I've actually gotten this question quite a bit of times as far as like which brokerage should I use and which kind of format should I take when it comes to wanting to do dividend investing. Now, it's great to hear that you already technically have a Roth IRA account, whether it's with Fidelity or anybody else. That's just fantastic. For me personally, I think, because that's how I have to answer these kind of like from a personal standpoint, because always consider I am not you guys' financial advisor. I'm just somebody who's kind of sharing my journey. But for me, I want to have this money that I'm kind of working for within the next 10 years. So I'm actually having this as a taxable account. So that way, when I'm about 40 to 45 years old, if I so chose to use this money, I can take that money out as far as dividends and use that for anything else that I want. Now, also too, I want to keep in mind that I also have a retirement account where I do have money put away every single month to help grow that for retirement and just strictly in that area. But when it came to focusing for dividends, I really wanted to focus in with a taxable account because I plan on using that sooner rather than later, where my investing for retirement account is more focused on the growth aspect because I'm not worried about getting paid out those dividends anytime soon. So that's personally the way I would like to go. So with an M1 Finance account, I really love their dividend setup. It's so great. It's so wonderful to actually like place everything how I want it to, have everything work together, and then have things auto invest once I hit over a certain dollar amount, and then reinvesting those dividends as they come in. It's always a great feeling to be able to see that compounding interest happen in small bursts, to know that down the road it's going to be more and more impactful as well. But like I said too, if you guys are interested, I'll have a link in the show notes that does help support me to continue to provide free content like this if you are interested in getting started with M1. And if you have questions, I have tons of tutorials with M1 Finance here on my channel. You guys can check those out. If you type in M1 Finance tutorials, you'll probably see my face on the thumbnails, and I will help answer those questions you guys have, because I've been using the platform for about a year and a half now, I believe it is, and I've definitely learned a lot, and I've experienced a lot of things that came up, and people have asked questions, and I've tried to figure it out and answer those for you guys too. So now the next question I have here, it's Wazi112143. Hopefully I got that right. It says, what is the minimum you need to deposit to make a fractional share buy on M1? Heard about the changes, which I'll go over here in just a second. And then the rest, he was talking about, he just sold NRZ because I feel like it's risky because I don't completely understand their business model 100%. And then he said Disney did pretty well, or pretty good today. Now, first and foremost, speaking about NRZ, I know a lot of other viewers and YouTubers here actually have NRZ in their portfolio. I currently have them as well too, but I did like that they mentioned that they didn't completely understand the business model, so they kind of did end up getting out of it. That's always a great thing to do if you're not fully understanding how everything works in a certain business. I don't fully understand every single business that I own, but I try my best to get a good grasp of what they do, as well as their, their books, and as well as their like history and everything else that kind of goes along with it, and their CEOs, which is why I don't have a lot of stocks anymore. I used to have like over 55 plus. I'm down to about 30 or so. Just because I figured out over time it was so hard to keep up to date with everybody and what's going on with all these stocks. But going down to the other question, as far as what is a minimum you need to deposit to make a fractional share, there's kind of like a couple steps to this. So first and foremost, to actually have money going into your account, you need $10 deposit minimum. just to have money transferred into your account. But if you already have money in your account, what you can do is actually invest manually into one stock individually for as low as $1. You can't do anything less, but you could do $1 and up. And then obviously depending on what you have in your actual account. To do auto investing, it needs to be over $25 to be able to have all that money just automatically invested throughout your portfolio. So if you get paid out a dividend of like $1.75, you can have that $1.75 manually entered into whatever stock you want, whether it's the company that paid it or another company you'd rather have that money go into. And I actually kind of like that overall, just because I have a little bit of control over my portfolio and where it goes. I do have some videos talking about how to buy into individual M1 Finance stocks. So if you're curious about that, again, just check here on my YouTube channel. Now, if you have any questions you would like me to answer in future videos, go ahead and leave them in the comments down below. And I would like you to keep on learning and growing with dividend investing. So check out my video right over here. Thank you so much for watching, and I'll see you in that next video.